All right. Good morning. Good afternoon, everyone. Today is January 8th, 2013. This is CFRN. I am going to go over the results first. In the live trading room this morning, we started off a little bit late because I had a technical difficulty. Everything was working right up until 2 minutes before the open, and then something went wrong, and I didn't actually get in there and get started trading until about 10 o'clock. So I missed a half an hour of great trading this morning. The results: the NQ were plus 8 ticks on the NQ. Gold, we were actually break even on the gold. We were minus 8 ticks, but I went a little extra because a little beyond 11:30 because I started a half an hour late. So we got back to break even on the gold. The Russell, we were plus a tick on the Russell. The soybeans were plus a tick on the soybeans. The crude oil, we were plus 3 ticks on the crude. So we had an up day, though it was a late start, and I missed a bunch of stuff in the morning, unfortunately. Now, if you have not taken a free trial with us, go to www.cfrn.net/apply, sign up for the free trial. In the free trial, all we ask for is your name and your email address. We do not ask for any credit card information or anything like that. While you're on the free trial, you get 5 days in our live trading room. You'll also get an email will be sent to you with information to... Hang on, I'm trying to update this file here. With information required to download the charting platform, to install our indicators, and then if you email me at support@cfrn.net, I will send you off information that you need to get 2250 to get started, to get your layout looking exactly like mine. Let's see, on the morning session, the total profit on the morning session was only $92.50 a contract, but that is pretty darn close to the 2 points that we say that you should be striving for. All right, it's only $7.50 away from that 2 points. So far on the year, in the 5 days that we've been trading, we're up $942.50 in the live trading room per contract. All right. Let's see. Let me go over the trades. All right. I'll start off with the crude oil all the way over to the left, the way that I have been. All right. Again, if you haven't taken the free trial with us, go to www.cfrn.net/apply and sign up for the free trial. Now, you see all this movement in here in the first half an hour. I missed all this. There was a lot of opportunity in here. There was one right here, a shorting opportunity in here. Let me explain the setup to you. All right, I'll start right from there. What we look for is the MA1, which is this blue and red line right here. We look for that to cross down below the green line, which is the BBC. BBC stands for Bull Bear Cross. When it crosses down, we're thinking short trades. All right, we're anticipating price is going to pull back up, test the BBC, and give us a down close. And it does that with bearish divergence. Then we would take that trade right there. No, Alan, it's before commission. We would take that trade right there. Okay, it's excluding commissions. But if there is so much momentum in the market that it doesn't pull all the way back up to the BBC, okay, that it doesn't pull all the way back up to the BBC, and we have some good divergence down here, then there's still a good chance that the price is going to continue in the direction of the trend. So you wait for a close down below that trend line. You look down here and you see how much room you have for price to run, for price to bring this green line down into the cycle. Here you can see there wasn't much room and it didn't go very far. Over here we tested the BBC and we had a down close. You could have shorted that, but we had a little bit of blue right there on the cycle, so you would have wanted to wait and be conservative for the close down below the trend line right here. All right, there's a little bit of an echo in here. Give me just a second. I will take care of that. Oh, I think it just took care of itself. I think. All right, so what we would have done over here had I been there is look to short right here on the down close below the trend line. All right, that drop down here. Another opportunity right here, close down below the trend line for the drop down of there. Another opportunity in here, if I were drawing a trend line up, the down close would have been, well, let's draw the trend line. I was eyeballing it, but we'll draw the trend line. The down close would have been right here. Okay, this one over here. This would have been a close at the trend line. You could have done that one too, but this one right here probably would have been the one to go for. And it did it again. And this was all on crude oil, and this was all in the first half an hour that I missed, unfortunately. All right, there are all these trading opportunities. Now let's go beyond that to where I did actually start trading. In here we had to pull back up and a test of the BBC. The down close below the trend line was right in here. Okay, it was right in here. And I did short that. I ended up taking a break even on the trade. I'm not sure why I ended up taking a break even on the trade, but I did. I think it dropped down here and I moved my stop to break even. And it came back up and got me out of break even. Blue on the cycle. Is it because I took a down close trade because of the blue on the cycle? Okay, thanks, Frank. Because I made a mistake on the trade, so I got out of the trade. Over here, nothing. We didn't get the down close until it was too late. Over here we had nothing. Over here we had an up close. The up close, the entry should have been right here on the up close right here. I actually entered in there and took a little bit of profit on it. I think that was on the crude oil. That's where I got my 3 ticks profit, I think. There were some more opportunities in here. You can see in there and there and there. But that brings us into the break. That said, we don't have anything right here. There's no support from the slingshot over here giving us any indication where the market's going to go. All right, that was crude oil. On the Russell, we took one trade on the Russell this morning. Let's see. From the open, it was pretty choppy right here as it was bouncing off the bottom of this weekly trading zone. Then it decided to start moving down, and there were some opportunities in here. This was while I was still attempting to recover from my... This is where the trend line ended up being. While I was still recovering from my technical difficulties, the shorting opportunity would have been right there below that trend line. Okay. Now the reason I ended up drawing it like this is because the initial trend line, which would have been going up like that, had this bar right here, put a wick down below it. All right, so then you got to draw across the bottom of that one. Then you don't get any closes down below that trend line. You get a wick down below it again. So then you got to draw across the wick. That's how we end up where we are. All right, then you look for a close below that trend line. That's what happened right in here. You take the opportunity there to short, and it happened again over here. Now on this one, you can draw it up like that because this one hit the BBC. As soon as it hits the BBC, you stop moving your trend line. You look for a close down below the trend line. That was right in here. All right, over here you would look for this close right here, and that was all before I started trading. Once I did finally start trading, I took a short over here, and I took 1 tick profit here. Okay, on the short trade. It did end up moving down. I was looking for it to get down to the weekly trading zone, which is down below right here. At 868, it came within a tick of hitting that, and that was it. Right now we have a little bit of bullish divergence just starting to develop, but we don't have any trade there yet. Okay. That was the Russell. Now on the gold. Let's see, I took a couple of trades on gold. 3, it looks like. 4, it looks like. 4 trades on gold. There were a bunch. I won't go over the morning session. I'll just go over... Well, I won't go over the part that I missed in here, this first half an hour. There were a bunch of shorting opportunities in there where you could have taken some profit. Right here where I think I started paying attention right in here, there was a long opportunity there, there, and there. There was nothing here on the short side. Then right in here is where I started. It was right around 10:15. There was a short opportunity there. There was another one right in here. I took this one over here, and I ended up taking a break even on it. I missed one right in here. There was nothing to help us with the slingshot. I think that's probably why I just let that go. Over here, once we finally got divergence again, I did take the trade over here. Though I messed this trade up, I got into it too late. The actual entry spot should have been here at 54.2, and I ended up getting in twice. I got in at 54, and I got in at 54.2 or something like that, but I got out of the trade right here at break even when I realized I was all messed up in the trade and my entries were not proper. I got out of the trade. The spot to enter it was right over here at 54.2, and it dropped quickly from 54.2 down to 53.2 for a 10-tick move. I should have taken my order off, but I didn't get it off fast enough, and then it filled me, and then it slipped me, and there were a whole bunch of things going wrong there. But so I got out right away. When I realized I was in the trade incorrectly, I got out right away at break even. All right. The thing did end up going down, which is good, but I was out of the trade. Over here, we had a bullish cross, pullback test to the BBC with an up close. There was an opportunity to get long right in there. There was another one right in here where it closed up above the trend line. I believe I did not get long right here on the up close. I should have gotten long right there on the up close, but I missed it, and I waited for the close up above the trend line, and that ended up stopping me out right away. Okay, after it stopped me out, the price did move up eventually. There was an opportunity to enter it again right over here. Nothing here on the short side, and right at the close, I did enter over here again. I got long on the up close with the bullish divergence, and I got my 8 ticks back that I lost over here. So I had 2 break-even trades, a loss and a win on the gold, and I missed a whole bunch of good trades. All right. What I want everybody to take away from this is I'm doing the same exact thing on all these markets I'm showing you right here. I'm doing the same exact trade setup. Okay, I'm using the same set of indicators. I'm placing the same exact trade setup. I'm looking for the same exact things. It's on the same time frame. It's just a different market. I don't anticipate that everyone would be able to do that, would be able to trade all these markets. I expect that you would want to focus on one market, nail that market down, start making some money with that market, and stick to that market. If you were doing that, you wouldn't be missing all these trades that I'm missing. Okay? All those ones in the beginning where I had technical difficulties, you guys should have been trading and taking profit. It's just the way it is. Sometimes I have technical difficulties. Happens about once or twice a year, it seems like. All right, now let's see over here. I'm not going to go over all the stuff. This is the NQ. There was a bunch of things pre-market. Well, not pre-market. There was a bunch of things in the first half an hour. You can see I had drawn these lines in here where you would have been shorting, going long. That one wouldn't have worked out. But those would have. That one would have. That one would have. And then in here where I finally did trade, I got short in here, and I took profit down here. I took 8 ticks profit on that. I had left an order on in there, and I got triggered in again, so I ended up with 9 ticks profit when I got out of the thing. But I'm only counting 8. As far as the live trading room results go, I'm only counting 8. There was some more opportunity in here. The same exact thing again, pulling back up, testing the BBC, gives a down close below the trend line because there's a little bit of blue on the cycle. You take the trade. Again over here, up close. This one went just a little bit before it pulled back. Depending on what your risk was, you may or may not have stayed in that. 04 down to 0275. You definitely should have stayed in that and gotten profit out of it if you would have taken the trade. All right. That was the NQ. Now the soybeans. Oh, I missed all this movement on the soybeans. Darn it. Okay, the soybeans, we were waiting for the soybeans to open up and waiting. And then finally they did open up right in here at 10:30. And I was looking for the down close below this trend line I had drawn on here. We did get the down close. I shorted there, and it gave me about 4 or 5 ticks profit. I moved my stop to plus 1 tick. It came back, stopped me out at plus 1 tick, and then it moved up. Over here, the soybeans, again, same exact thing, guys. Look for the close above the trend line. Right there. There's even bullish divergence, so you could have entered right off the BBC. I believe I might have even said that in the live trading room this morning, but I wasn't watching it close enough. Then it was, it got pretty choppy in here, and the live trading room closed. And there was some more opportunity right in here. Okay. There was some more opportunity right in here. Right there was some... And right over here was some. And right over here, right now, is some. Okay? All that on the soybeans. Alright, that was the morning on the soybeans. So now I've done the ES. I haven't done the ES. I've done working my way over this one, and this one. Now let me jump on the ES. There was one thing I wanted to show here on the 10,000 contract on the ES before we jump down to the 4 tick range. We had a pierce of the envelope right here, by a green trend strength line. That suggested a 5 to 6 point move down. Price at the time was at 14.52, suggesting it was going to move down to 14.46 or 14.47. It nailed 14.46 right here. Okay, that's what it suggested to us over here at 9.53. So, knowing that, on the 4-tick range, there was an opportunity to short right here. It was going right into the weekly trading zone, so I obviously suggested not trading it. We did have bearish divergence. We didn't get a test of the BBC, but we had the trend line in there and a close down below the trend line. All right. After it got through the weekly trading zone, there was another one right here. Same thing. Had some bearish divergence, got to close below the trend line. There it was. Another one right over here. Now this one obviously gave more points. Went from 14.49 down to 14.46. This one only gave about a point, from 47.25 down to 46. Right now it's going back up right into the weekly trading zone, so we're not going to take long trades into the zone. Okay, that's just a rule for me. Looking at the YM, there were a couple of spots in here where I said, right in here, I said a down close on this bar should get down to the swing low right here. And it did. And then it got really choppy in here. I wasn't really paying attention to it, but at the time when it was choppy in here, everything else was even more choppy. And the YM was the only one that actually gave a signal that could have been traded. The down close below the trend line with the divergence, the bearish divergence, worked out pretty well over and over again over there. Okay. Right now, well, recently, we had this. All right, there's the trend line. There's bullish divergence. You could have just taken the up close off the BBC with the bullish divergence. I don't like to trade the indexes in the direction of the weekly trading zone when the ES is right up against the zone like this. You know, like I wouldn't want to go short on any of the indexes. That means the Russell, the NQ, any of the stock indexes. That means the Russell, the NQ, the ES, or the YM. All right, I wouldn't want to go long, is what I mean. Did I say short? I meant long. Anyway, that was the YM. Now, I didn't trade any natural gas this morning, but there were some opportunities on natural gas. I know that because one of our partners traded natural gas and made money. I haven't looked at it yet, so I'm just looking for the opportunities in here. Well, there's not really all that much between here and here. But let's just take a look. Here's the low. So drawing up the lows, it would have gone there. Not a down close below it, so then you're drawing there. Then there was nothing there. So we'll take the high. Okay, drawing down the highs, there's nothing there. Then we'll take the low again. Drawing up the lows, looking for the down close. There was a down close right here. That would have stopped you out. Nothing over here. Let's see. Yeah, that would have definitely stopped you out. There's nothing over there, and then right in here. That would have been the trend line over there. So you would have made the money back right there. All right. Looking. Oh, I missed a section over here. All right. So these would have been the trades on the natural gas this morning. One there. One there. And one over there. Where it is right now, the natural gas, this would have been the trend line, and that down close right there would have been your entry. Okay. All right, that is it. We're going to wrap it up. Let's see. We are. We're going to wrap up the not the live trading room, but the recap of the live trading room right now. We ended the morning session. Again, I'll go through it all. We ended the morning session +3 on crude, +1 on beans, +1 on the Russell. We're flat on gold, and +8 ticks on the NQ. All right. That's it. So far on the year, on the 5 trading days, we're plus $942.50 per contract, excluding commissions. All right. That's it. I'm going to wrap up the recording.